What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be checking out Jack in the Box stock because the stock is down again today. And in the last couple of years, it's had a very rough run here. As you can see, 3 to 4 years ago, the stock was at $120, and now it's only 40. So it's been falling for multiple years now. But the valuation has come down a whole lot, and we're going to see what the current situation is. So market cap of $740 million. So it's a very small company, right? It could be a penny stock at some point, but it's a very small market cap. So first thing I want to point out here is that in 2022, Jack in the Box acquired Del Taco for $585 million, right? So keep that in mind. And that seems to be where a lot of the problem is, honestly, when I look through the numbers here. So this is off of their investor PDF. Here is the sales for Jack in the Box year over year. 2023, they did 413 million. This year they did 427 million, right? Now, Jack in the Box's financials this year were not perfect either, okay? But just compare this to Del Taco, where the numbers are 430 million for last year and then 280 million for this year, right? That's a big difference. Del Taco is really a big problem here. And so, I mean, they always could sell that company back off. They could always sell it off, but I mean, it's just that seems to be what's holding them back in a big way right now. Now, one of the good things I do like is that, so as you can see, for both brands, same store sales went down just 2 to 3%, right? Nothing crazy. It's just a 1 year thing. And the good thing I do like though is that with both brands together, they opened 44 restaurants just this year. Okay. Jack in the Box opened 30 restaurants, the highest openings in over 10 years now, and Del Taco refranchised 47 restaurants. Okay. So Jack in the Box is expecting to have 8 restaurants open next year in Chicago, and then we'll enter Florida as well. That's the things I really do like. That's what I like to see. As you can see, even just the fact that they're opening new restaurants is going to help. Okay. Then we get into this. This is a list of the most popular fast food brands in America. I thought it was interesting just to point out Jack in the Box is at number 20. So not super high up on the list, but not the worst either. At least they made the top 20. Okay. So that's another good thing for the company. Now, if we look at more specifically the financials here, we can see that, well, the other thing I kind of like is that the dividend yield is 4.5%. That's more than you're going to make in just for the interest rates in a normal, Robinhood Gold account. But here's the revenue chart. Okay, this is what's important here. So in these years, they were flat at 1.6 billion roughly. 2018 it drops off, and then for out of the last 7 years now, they have grown revenue besides for 2024. So out of the last 7 years, they have grown revenue. That's the good thing. But revenue took a bit of a dive here, and so that's not the best thing. Then we go to net income, which is more important. This year was negative, okay, but the last what 8 years, 9 years or so, it's been roughly flat. I mean, again, these are not great numbers, but at least they're fairly consistent. They're putting up over $100 million of net income, and the company is only $740 million. So you're paying 7 times forward earnings. There's not many stocks that trade that cheap. Now, most of the time, if there is a company trading that cheap, it means it's pretty much going out of business and you don't want to own it. And so this could be one example of that. But honestly, the risk to reward here is pretty attractive because if they turn their numbers around just a little bit, they show a little bit of growth, net income goes up just a bit to maybe 150 million, 160 million, something like that. Well, then this stock could probably double, right? I could very well see the stock doubling. If we come down, cash and debt is not great. They barely have any cash, and they got a decent amount of debt now. Dividends they've been consistent with, which honestly I don't think they need to be paying a dividend for the situation they're in. Surprisingly, I shouldn't say surprisingly, but shares outstanding look really good actually. I mean, they've been buying back 10 years ago it was 38 million, and now it's only 19. In the last 10 years, they've cut their share count in half. So that's very bullish for the stock. I mean, ROI has gotten worse, 36% down to only 1% last year. how the profit margins were negative. I mean, normally, 7, 10%. So I'm not saying this, it's tough. I just think it's an interesting play for a turnaround play. You're barely paying anything. You're paying 7 times forward earnings. It's practically nothing. Now, with this trend that we got going here that's been lasting multiple years now, pretty much, the stock could keep going down. It could go down to $30, maybe $25. It's possible. But that's why I might invest just a small amount, just because I don't know, unless this company is going out of business. I mean, somebody else could buy them out too. They could buy them out, they could sell off the Del Taco brand. Lots of things can happen here. And since I'm only paying 6 or 7 times earnings, then I'm not really that concerned. If we go to what analysts have them doing, we're looking at what, a little over $6 of EPS, $6.50 EPS for this year pretty much, and then 7.5 next year. I mean, you're paying what, 6 times earnings, not even. So that's the thing. The risk to reward is pretty attractive here, and so I might buy a couple of shares just to see what happens. I wouldn't risk a lot with this one because it could be cut in half over the next year or something. It's possible if numbers keep going down. But I mean, is that really realistic? I don't know. I think they're at least gonna jump back up to $100 million of net income or something. And when that happens, I think the stock can shoot up pretty big. So that is my analysis for Jack in the Box. Let me know what you guys think down below, and I will catch you in the next video.